Hi everybody, it's Chris from Serene Education with the 4 majors and as update for the 13th of August 2013. Going over the 4 majors this morning using the FX Ultimate 8 template, which is the buy and sell arrows plus our indicator box in the bottom here to give us more probability of what price is likely to do. And let's start with the euro against US dollar to see what's been happening, what happened yesterday, to give us an idea what's likely to occur today. So what we see is price moving higher, has been moving higher since the early part of July. However, near term finding resistance above here in the shape of the 13.39.5 mark, and subsequently prices dropped towards the prior support and resistance level, just around the 13.29.8 mark, and now we've seen a consolidation on the Asian session. The indicator box pretty much painting positiveness, and we have seen positiveness. However, yesterday in particular we had negativity intraday, primarily because we'd been trading into this high here, the prior high. As long as price is still looking positive because it's still above the weekly fib as well as the monthly all-time fib here, the 38.2, and above all the moving average in particular. So still price looking positive, however near-term consolidative as we head into that major high. If price can actually find support here near-term at this level here at 13.29.38, then price might likely reattempt the current high. You can see the 50% retracement on the weekly fib, not too far away from where price was, but if we can see price reattempting the current high that we've just seen recently at the 38.94 mark, if we can get above that, then there's a good 92 pip run or 90 pip run to that level, take away the spread, which isn't too far away. As long as price is making swing highs, then we're very much in an upward trend. It's just consolidative near term, primarily because we have tested a prior high. Pulled back, if you can maintain above this 13.29.38 for the remainder of this week, the likelihood is price is going to make a reattempt at the current high. If we don't, we see price breaking lower, then ultimately what's going to happen is price is going to reattempt the weekly fib here at the 38.2 very shortly, and subsequently if it doesn't find support there, then ultimately the 38.2 here on the monthly will be tested. And we have been down here in the past, guys, not too long ago, where we're here testing these lows, and we could very well do that if we don't find any support here near term. So very, very important with the pullback. We do see price not falling through here, not closing lower than this level. This is going to be our intraday support. So if we move to our 4-hour time frame, just make it nice and big so you guys can see it. There we go. You can see a major resistance level here over the past couple of days, last week in particular. And if we can see price actually finding support over here, then we could see that bounce upside. A lot of consolidation over the past 20 hours, in particular for this particular pair. So ideally you want to actually box this, put a trigger alert on either side and say, great, 4-hour candle close higher on support would dictate that we should be looking upside. 4-hour break lower than the support over here would confirm that there's still negativity on this intraday, and then we should be looking for the swing lows to the downside towards that all-important institution here lying at the 38.2. Sterling, big day for sterling today because we have CPI year-on-year figures, we have the yearly inflation report, and we're expecting a slight, a far better, or a 0.1% positiveness report on this. So very, very important. This is considered UK's most important inflation data report because of central bank's inflation targets. Carney was talking about it the other day about his inflation report and what they're trying to do to get that on the side. So it's very, very important for sterling. This report here at 9:30 a.m. GMT this morning, we're going to have it. So if you're not trading sterling, rather stand aside until we actually get the outcome of this, and wait a good hour after that news announcement as the actual news announcement is filtered through the markets, and then we look to actually trade it. The good thing about sterling at the moment now is the fact that we've actually seen a lot of upside, and upside after Carney's words that we had last week in particular, talking about interest rates, the inflation report, and the unemployment figure. He'd like to see that unemployment figure drop below 7% before they even think about looking at changing interest rates, etc. And that's going to be important because what it does is, you can see price is now trading above the institution. We haven't been above this level. This is the only second time we've been above the institution moving average this year. So it's a good sign that we're reattempting it quite soon after this prior move to the downside. What we can see now, if the inflation report is positive for sterling, we could see that bullish engulfing candle forming today above the institution, above the weekly fib here at the 38.2, which would then tell us that we should be looking long for the foreseeable future, which can target 50% fib here on the weekly as target 1, and then target 2, the prior breakout fib level here at the 61.8, which is at 1576. So there's enough profit here, enough pips to be made if and when we get that confirmation candle. We had a breakout a number of months ago, and that failed to break out, and the pullback occurred, but we failed to get that support candle on the price support and resistance level high to see price moving higher. Are we going to see the same scenario? I think the CPI year-on-year figures today would go a long way as to suffice what the likely outcome is likely for the remainder of this week. If it is positive, then expect to see a nice bullish engulfing candle as sterling gains ground against the US dollar, and then we could see price moving higher through the US session this afternoon. If we don't see a positive inflation figure, then we could see a bearishness, and if we get below the 30.2 on the weekly, then ultimately we could see monthly low here at the 23.6 being tested quite soon. You can see that the overall sentiment swing high, dictated here by these major pullbacks, and if we don't see price consolidating here, that would be our likely target for the foreseeable for this week in particular. If we do see a bullish engulfing inflation report, then we could look to target this level at the top. Moving on to the US dollar Swiss franc, a lot of consolidation recently, and that coming at a major support and resistance level here in and around the weekly fib level here at the 23.6. So breakout recently, the pullback. Now the 23.6 of the weekly needs to remain in place as resistance level. So we had the price support through here, and then we had the breakout, the pullback. Same thing, we had the breakout, the pullback, and then we were expecting price to drop, but it didn't. It broke straight back up again, then the pullback, and then the continuation in the opposite direction, reattempting prior monthly highs at the 23.6 on Fib. Same scenario could happen here if we see price breaking higher and pulling back and then continue higher. Here, because we're at the undersign, it's looking negative, a very mixed chart. There's a lot of negativity on the longer term stuff, and the R squared is complementing that, especially on the weekly and daily. However, we go into our intraday time frames, you can see a lot of indecisiveness here on our 5, 15, and 30 minute in particular. Not really good, but one thing to notice is that price is making lower swings on the daily, and swing lows depict downside. Okay, and you can see we're not making higher highs, so therefore we must be making lower lows. And if we are making lower lows, that means we're on a negative trend. We are below the weekly fib. Okay, we are below a major monthly fib. So things are negative. All the moving averages above price, including an all-important institution. So I'm building a picture. Everything is looking negative. So intraday, this 23.6 is going to have to be my intraday resistance level. As long as price is being resisted below this fib level, then price is more likely to fall over, and then we could see price reattempting the prior lows that we saw recently. And that is apparently roughly 72 pips away. So there's enough profit over here to be made intraday if we do get a bearish engulfing candle here at this major resistance level, which was prior support. So prior support becoming potentially a new resistance. Okay, so you have to wait patiently here for a nice bearish engulfing candle at this level. So ideally a 4-hour candle, and if we do get it sometime today, then we could see potential targets of roughly around 50 pips after the move to this level here to the downside. And if we get a break below that, then we can start looking at these weekly lows way down here at 88.43. So patience is a virtue on this particular pair. Be patient and you shall be rewarded. If this is generally a breakout with negativity, then we should be seeing a bearish engulfing candle follow suit soon. They're shooting star of something around this area, which would indicate negativity, and then we could target that level. The other scenario would be a bullish engulfing candle break higher. That would stand that there's still negativity, there's still indecisiveness because price cannot find a reason why to go lower, and that would mean that we should see a pullback. And if there is a genuine pullback, the institution moving average on our 4-hour would be our likely target. US dollar Japanese yen, the last pair of the day, you can see over the past couple of days a lot of selling, last week in particular selling aggressively into the institution moving average, and then we had a major bounce. And what the bounce has done is taken us back up above the 50%, the weekly fib here at the 23.6. If she maintains above the 23.6 now and finds support through today and tonight, then we could expect price to rally higher and to reattempt this trend line roughly around the get above 38.2, which is our daily fib. Then we could see the 50% retracement here being targeted, which would bring us around the downside trend. RMI is below, MACD is still below. Here again, most of it's still positive. However, you can see we've been in this wedge shape for some time now, and the bull bounce that we saw recently has taken us above the weekly. So if it maintains above this fib, this weekly fib here, the 23.6, then we could see price building higher. If we don't see price holding on to this fib level as support intraday, then we could see a reattempt of those institutional lows, which is the current low that we're seeing here recently. So very, very important. A lot of indecision candles now. We're above it. As long as she maintains above the 23.6 for the remainder of this week, then there's very much a chance that we could see price moving higher towards that institutional on our 4 hour. Failure to do so, and we see a bearish engulfing candle close lower than that, that would tell us that the price overall is still one of negativity, and then we should be targeting prior lows to start with. Get below that, then we look at the monthly low down here at the 38.2, which is sandwiched between the 94,400 and the 93.64 mark. And from these lows here to that level, you're looking at approximately 192 pips. Take away the spread. There's more than enough profit to be made on this as long as you wait for the confirmation candle. Got to be very, very important. Okay, so that's it. Very quickly, 4 majors this morning using the FX8 Ultimate template. Any questions regarding this template? If you're interested in getting your hands on it, please drop an email to us at info@sereneeducation.com for information pack out to you. You can see more about it if you want to talk to one of us. That's it. I'm going to leave you with that. I hope you have a fantastic trading day. Please be aware, the most important news announcement this morning, especially for the UK market, is that inflation year-on-year report this afternoon. Then we go into the US retail sales month-to-month figures. We have core retail sales month figures, and then later this evening we have the retail sales quarter-on-quarter figures for the New Zealand market. So there's a lot coming out today. Please look at the charts to see how it's going to reflect on price action, depending on what the outcome is likely to be. Keep it simple. Look at your major support and resistance levels, and then build a picture on exactly what price is likely to do. Back it up with some money management, and you got a winner. Don't make it overcomplicated. Don't overcomplicate your trading. There's no need to be overcomplicated. Other than that, I'm going to leave you with it. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.